Well, alternatives I think are going to play an increasingly important role in the advisor portfolio. Where alternatives are really good are really with clients that have kind of a big sum of money. They're not pulling from it right now, so they're not in decumulation. That gives them a really huge advantage in terms of being a supplier of liquidity to the market. So as you add alternatives to the portfolio, one, there is that de-risking element that I think people are more familiar with. But two, I think there's an opportunity to collect a return, whether it's a liquidity premium, if you think about it that way, in a way that isn't as volatile over the long run as, say, the stock market is. So, alternatives are going to play a larger and larger role, both as a de-risking, but also I think as a return opportunity source for advisors. What's happening with alternatives is interesting, it's explosive, it's almost like a turn back the clock moment, right? In 1992, Morningstar created the style box, and it was a risk map that brought order to chaos in the equity and the fixed income world. Well, what we're working on right now is that risk map for the alternative space, and just even more broadly, things like real estate and private equity and areas that just are kind of outside that equity and fixed income space. So we're working carefully. We've launched large education sites. We've increased our categories. We've added a lot of research talent to the space. So we're working in those areas. We're working in areas to increase our data capabilities around derivatives and fixed income. So we've got a lot going on around alternatives. I won't say that we have all the answers now, but it's definitely got a lot of forward momentum for us. Strategies that work well in the 40 Act are ones that don't require a lot of leverage and can deal with the daily redemption issue that happens around 40 Act funds. So, in the 40 Act, if you've got a strategy that can't deal with somebody coming in and wanting their money back right now, it's not going to work in a mutual fund. But I think there are other structures out there. I think there are ways to do structures in closed-end funds, that would allow for that protection. I even think there's ways to do things inside the ETF in terms of if the strategy requires leverage, where you can do things inside of an active ETF wrapper per se, and then allow the investor to actually put the leverage on the ETF through options or buying it on margin. So I think there's a lot of different tools in the toolkit. We're really just getting started exploring what those are.